Welcome back to the ETF Inspector. It's Tuesday, November 11th, declaration day for Group 1 of YieldMax, and it is about 9:17 in the morning. And today we're going to just go over the declarations for distributions this week. So we'll start off. If you take a look at YieldMax's website, you can go up in the menu here, distributions, slide down. They give you the schedule for the target 12s. Group 1, which is what we're talking about right now. Today is the 11th, declaration day. Tomorrow, Wednesday the 12th, is X/record day. And then Thursday the 13th, we will receive that payment. They also have the schedule for Group 2. Those are the things that used to be every 4 weeks but became weekly. And then they list what all is in Group 1. It's basically everything that was always a weekly in the first place, plus feet and 5e. All right, so reminder, I'm on X at ETF_Inspector1. I let you know when videos are premiering. I also repost announcements like this one. And so before we get into it, let's take a look. Actually, let's save it. Hopefully I remember. We'll save it for the end, kind of see some of the reactions people are posting to these announcements. So for starters, I like to enter them into my own spreadsheet. Makes it a little more condensed and easier to look at for quick comparison, but we're not going to go through all the information here. The reason I have two highlighted, even though they have different amounts, Salty showing that they're paying 80.99% and LFGY paying 80.96%. I guess I'm kind of declaring them tied winners because in this case I'm showing Salty with a slight fraction more than LFGY percentage-wise, but based off of the email, when they made the announcement based off the numbers they used, the slight favor actually went to LFGY percentage-wise. So in either case, you're getting basically 81% either way you look at it. But we're going to go into more of the details on the email. So that comes at 6:55 in the morning on declaration day. And if you are interested in receiving those emails, you go to the YieldMaxETFs.com page up at the top, click Stay Connected, scroll down and enter in your information, and you will receive the emails and be the first to know the information as well. Okay, when we take a look, this is the email that comes out. We will just slide through real quick and go over them. This gives us a little more information than what I have on my page. It includes the estimate for return of capital. And so it's always important to remind people, just because it was not return of capital or was return of capital within this week, that does not decide its overall standing. All of that plays out once all the dust settles and the year is finished. Just like you could make gains on January 2nd in the option market, but they would be taxable, but by the end of the year you may have made more losses than gains, meaning that you don't have to pay taxes on those gains you made January 2nd if you have more losses than gains. So regardless of how things worked out per week, they still have to play out into the entire year for them to be officially decided what percentage is or is not return of capital. All right, so when we go down the list, we start off with Chippy, YieldMax's semiconductor portfolio option income ETF. They announced 45.44 cents per share. That's a roughly 41% annual yield, and it was 100% return of capital. FEET, this is the Dorsey Wright Featured 5 Income Fund, very similar to 5e, paying 45.39 cents per share, or just over 78% annual yield. And it was 0% return of capital, meaning they actually, through trading, brought in 100% of the amount that they are paying out this past week. 5e, YieldMax's Dorsey Wright Hybrid 5 Income ETF, paying 31.31 cents per share, just under 45.91% annual yield. 0% again, return of capital. So it was all income. So it was a good trading week. You're going to see that a little bit more this week on some of the ones you're not necessarily used to seeing, but you have to think back of last week. Markets kind of tanked last week. So if you're selling calls last week, then you're going to have kept the premium from selling those calls because the share prices did not blow through your strikes and make you pay out more than you brought in. So it's not always a great thing when you've got 0% return of capital, because that means in general markets went down. Now, markets could go sideways and we could have 0% return of capital. That'd kind of be a win-win, but that's not the case. Okay, GPTY, it's YieldMax's, I'm just going to call it AI Portfolio Option Income Fund. If you'll notice, GPTY has and tech, LFGY has and tech. That's because there's not specifically a sector of just AI yet or just crypto. And so they had to combine it with something that had a sector, but this is specifically an AI play. LFGY is specifically crypto. So GPTY paying 32.27 cents per share is 35.73% annual yield. The majority of it was earned income in the week. 18.14% of it was return of capital. LFGY, like we just talked about, the crypto portfolio option income ETF, paying 50.46 cents per share. That's over 80, almost 81, 80.89. So here's where I'll point out, right, we said salty showed up as a higher percentage when we entered it into ours, but we don't know what price that they, took a still shot on when they decided these numbers. But salty was 80.85 while LFGY was 80.89. So we're showing LFGY as the winner over here, SLTY as the winner on our other sheet. It's close enough. We'll call it a tie. And it was only 4% return of capital. So again, almost 96% earned income. Makes sense. Crypto got beat up last week. So if you were selling calls, those calls were expiring worthless. QDTY, it's their NASDAQ 100 0 DTE covered call ETF. So on QDTY, RDTY, and SDTY, they are selling daily calls against the NASDAQ, Russell 2000, and S&P 500. And that's what 0 DTE stands for, 0 days till expiration. They sell it on the day that it expires. So they are letting markets open up in the morning, getting a feel for direction, selling a call, and then finding out if they won the trade. 36.62 cents per share is a 41.58% annual yield. 42% of that was return of capital, so more than half was income from the past week. RDTY is on the Russell 2000, same thing as above. 45.71 cents per share is a 55.92% annual yield, coming out to 85+% return of capital. So that's the majority. A little under 15% was income. SDTY, once again, finishing out the trio on the S&P 0 DTE strategy. 28.51 cents per share is 32.22% annual yield, and only 9% of that was return of capital, so nearly 91% income. Salty, ultra short option income strategy fund. So there's a reason they did well last week. If the markets were down and they are shorting the market, that's going to go well for them. But if they are doing the reverse, they're selling puts to generate income. And so if the market goes down, those puts are going to get blown through. They're going to have to pay to close them out, but their overall value will increase, which is going to result in them having to pay more than they receive to close out those puts. So it ends up being 100% return of capital. They didn't generate the income, but they increased in value. 58.31 cents is a 80.85% annual yield. Like I just said, 100% return of capital. ULTY, YieldMax's Ultra Option Income Strategy Fund. I do coverage on that one as well as Salty and LFGY. 6.26 cents per share. Not much to say about that. Now, this is the surprise. So this is the first time I've actually been really thrown off or surprised by an ULTY payment. you get all kinds of opinions. It should have been higher. It should have been lower. They should do this. They should do that. And they've kind of stuck to in the range of 85% or the implied volatility in that range. This is the first time it has not been 85% and it has not been at the implied volatility. So 70.5%. So I'm sure they're going to get lots of questions about this tomorrow on Spaces with Wolf Financial, and asking is this a shift in the strategy? Are they trying to maybe pay out a lesser amount to preserve the NAV, or was this a one-time thing, or what's the thinking behind it? But 0% return of capital, so it was all income. Again, we showed that in our video throughout the week, that they're going to win your trades if everything goes down. You don't win big picture because your value of everything you had went down, but you're going to win the trades selling calls off of it. YMAG, it's YieldMax's Mag 7 fund of option income ETFs. This is the collection of their individual income funds related to the Mag 7, all of them bundled up into one, collecting the distributions from each. 17.41 cents per share is a 59.71% annual yield, and 97% of that was return of capital. So just a little over 2.5% was earned income. And YMAX, this is the Universe Fund of Option Income ETF. So this is all the individual income funds, so long as they've been around long enough to pay a distribution, get put into YMAX. 15.06 cents per share, 67.85% annual yield, and it was 95.7% return of capital. Okay, so that is all the information here. Let's do something we haven't really done before and just get a feel for what the community, that's not what I meant to do, is thinking about these. We got a sad face, can't wait to see Misty tomorrow, so that doesn't seem like they really can't wait. That seems like worried. People saying lowest distribution for ULTY, maybe it's a good thing if they're trying to stabilize the NAV. ULTY dividend dropping fast as the stock, just pointing out the percentage. YMAX and YMAG are looking good. People again asking, is this a new strategy? 100% income, 0% return of capital, 70% distribution rate. Chippy rocking steady as usual. I do like Chippy. Other people don't think that the low div in ULTY is preserving the NAV. They think it's ruined anyway. Showing, we'll end with that one. ULTY looking like a monkey on life support. All right, so let me know what you think. Are you okay with it? Are you out? Are you doubling down? What are you doing? Thank you again, and I'll catch you in the next video. Have a good day.